so many of the startups that are launched with so much fanfare ultimately end up failing. And we have done a video before this to understand what is it that is the death knell for these startups. Today, we are going to dive into a very critical area which most of us don't know how to read or most of us end up ignoring, and that area is revenue. Now, what is revenue? Revenue is the income that you earn from your main business activity. So, if I am into coaching and training services, the income that I get from coaching and training students comes under my revenue. But if I have some fixed deposit in a bank and on that fixed deposit I am earning interest, that is my interest income. It is not my revenue. Now, why does this 7-letter word revenue, why does it cause entire startup ecosystems to fail? The answer lies in revenue recognition. Without getting too technical, which we can by the way, but without getting too technical, let's talk about what is revenue recognition. There is an entire accounting standard called revenue from contract with customers, IFRS 15. Now, this standard gives in detail how should revenue be recognized, but let's not go into the technical part. Let's try to understand in a layman's language, why do startups fail? Because of revenue. Now, there is a concept called revenue recognition. What does the word recognition mean? Recognition means to record a transaction in your books of accounts in very, very simple terms. Now, revenue recognition means when exactly should you record a transaction in your books of accounts. Say for example, you come to me and you want to join classes with me. You pay me 15,000 rupees and say, Satyamedh, this is your fees for a particular subject. I get that money deposited in my bank account. The question is, I have collected money from you, but have I taught you the subject? The answer is no. I haven't taught you the subject yet. So, while I have collected money from you, I have not fulfilled my part of the promise. This promise that I have made to you is also called a performance obligation. So, while I have collected money from you, I cannot recognize this amount as my revenue. I cannot call it my sale. And what is the reason? I have still not performed my service. I have not fulfilled my promise. I have not completed my performance obligation. Customer se cash aa gaya hai, but can I call it my sale? Can I call it my revenue? The answer is no. So, IFRS 15 or the standard on revenue recognition is very clear. It works with an age-old principle, ek haath do, ek haath lo. You collect cash from the customer, but you provide service to the customer, only then you can recognize revenue. Unless you have fulfilled your promise, unless you have kept your part of the deal, revenue cannot be recognized in books of accounts. Now, what happens with startups is, please understand, so many of them, if we start naming, the list would go on and on and on. So let's just say all startups or most startups in modern India. What they do is they often make the mistake of recording the order value as revenue. Say you come to me and you tell me that, Satyamedh, I am going to take cleaning and housekeeping services from you for the period of next 20 years. Okay, and you have booked a contract with me on my app and you have said, Satyamedh, I am going to enter into a contract with you on your app, wherein every month you will come to me and you will deliver cleaning and housekeeping services. The total order value of this transaction is 3 lakh rupees. Okay, 3 lakh rupees spread over a period of 24 months. That is the basic idea. Now, let's understand what happens. Ideally, 3 lakh divided by 24, that is the amount of revenue that you should record in your books of accounts every month. Your team goes, does the cleaning and maintenance services for month 1, record the revenue for month 1. Then it goes, it performs the service for month 2, record the revenue for month 2. What is happening with all these startups is they record that entire 3 lakh amount, which is the average order value. They record that as their revenue on day 1 itself. So, customer has not paid me cash, customer can cancel the contract at any point in time, and I have, most important of all, I have not delivered my performance obligation, I have not completed my part of the deal, I have not completed the promise that I was supposed to fulfill. Unless and until I complete the promise, unless and until I deliver on the performance obligation, I cannot recognize revenue. So you see how faulty this is, that you have recorded the average order value as your revenue, but service has not been performed yet. Because service has not been performed, because performance obligation is not complete, you don't have a right to call it your revenue. But what is happening is this 3 lakh gets recorded as a sale. Now assume that there are 100 customers who enter into a contract with me and who say that Satyamedh, we are registering with you on your app for a recurring 24-month contract. Every month you come to us, you do the cleaning and housekeeping work, and once you raise an invoice, then we'll pay you the amount. So, and by the way, this contract is cancelable at any point in time. Now imagine 100 customers, each one of them has booked a 2-year contract with you. Total order value is 3 lakh rupees per customer. 3 lakh into 100, the amount is 3 crores, no doubt. While you can celebrate that you have earned a revenue of 3 crores, think about it. Have you performed the service? Have you delivered the promise? Has the customer received the service that you have been provided? No, if none of that has happened, then it would be absolutely incorrect on your part to record this particular amount as revenue in your books of accounts. What happens is, in order to convince the investors, in order to tell the world, you are recording 3 crores, 4 crores, 5 crores worth of revenue every single month. And of course, you are very happy about it. But tell me, if service has not been provided, is it right to record the revenue? No, it is not. Also, you have not even received cash. You record a revenue of 3 lakh rupees on day one, 3 crore rupees in the month of July. The cash for this you are going to recover over a period of 2 years, whereas all your marketing expenditure, all your expenses are happening on day zero itself. So you are spending 1 crore rupees every month on marketing activities with giving yourself the comfort that yes, I have earned a revenue of 3 crores. Ask yourself the question, how much cash have you collected? Against this 3 crore, how much cash have I collected in the current month? Barely a couple of lakhs. Okay, and I have collected barely a couple of lakhs, say for example 12 lakhs, and my cash outflow is 1 crore. How will I survive? How will the business take off? And while investor money can help you survive for a couple of months or years, there will come a point in time where this faulty revenue recognition could spell disaster for a startup. Why? Because it has convinced itself that it is doing well when in fact it is not doing well. Now this is open to debate. I am a chartered accountant, so I always think on those terms. There are people out there who would tell me with so much confidence that no, Satyamedh, this 3 crore is the revenue. Well, that is open for debate. And with so many startups failing in the outside world, this definitely should sound an alarm bell for everyone who is looking at financial statements, which is why it is critical for you to know what is the revenue model, how is the performance obligation delivered before you recognize revenue, before you record the cash entries later. So when you are an investor, keep your eyes and ears open before you invest, and keep this reason in mind. This is the reason why startups fail. And if you are investing in startups or if you are evaluating that ecosystem, you have to bear this in mind. Please follow the Plutus Education YouTube channel if you want more such interesting videos on different accounting standards and multiple other areas. If you have any questions regarding ACCA, CFA, CPA, US CMA, or any course for that matter, just drop a comment below and our experts will reach out to you in no time.